Hey, how's everyone doing? Hope you all had a great weekend. Getting close to Christmas. Hope all your shopping is getting close to being done. Be with you guys in a bit. We'll be taking a look at a few things from Joe Salente's Trends Journal. We'll be taking a look at the Gregor Gregerson recent interview. We'll be taking a look at Craig Hemke recent interview. A few things Jerome Powell said, and we're also going to be trying to figure out what are the positive things to look for coming up in 2022 and what are things that we should be concerned about in 2022. So I'll be with you folks shortly, and hang on, hang in there, and if you can, just let me know how the audio is coming in. If it's coming in okay for you guys, just let me know. I'll be with you shortly. Thanks. Yeah, hello again, everyone. How's everybody doing? Hang on, just let me get a few more audio checks in here. Yeah, I hope everything is going well for everyone. Getting close to Christmas. Merry Christmas. Thanks for being here. Let me just go through the roll call real quick. I don't know why my audio is not working here. Mike Craven, how you doing? Mutant Ref, Harold B, James Richter, Peter Coro, how you doing? First time I've seen your name. Guys, if you are new, go ahead and type in new and where you're from, and we'll see if we can go ahead and acknowledge you. Dutch Partisan, how you doing? Patrick Bateman, greetings and salutations as always. Let's see what else is out here. Yes, Merry Christmas, to everyone. If you see that in the comment section, that Silver Bullion TV, SBTV, that is my colleague Vincent, who is always here. So make sure to say hello to Vincent as well. So Vincent, thanks for being here again, helping me out with this. Jay Delaney, how you doing? Merry Christmas and Happy New Year to you as well. Thanks, appreciate that. I appreciate you guys as well. As I always say, your comments are more important than anything I could ever say. As people watch and they're trying to figure this thing out, if they're sitting on the fence, I'm saying one thing, but if you're saying another thing and they're looking at the comments, they'll probably like to see what you have to say more than what I'm saying. So comments, they're like reviews in some sense. People depend on it and they trust it. So your comments, they are a lot more they can reach a lot more than anything I say. So comments super important. Casey Willis, how you doing? Low blood pressure. Happy Hanukkah, Patrick. Low blood pressure. I need that. Like that name. Carrie Ellen Wilder, how you doing? Waka Waka, how you doing? Uh, UK, yeah, I know. Sorry about that. I know we're kind of late in the UK. Sorry about that, but thanks for being here. Appreciate that. Let's see what else is out here. Yeah, okay. So Jay, how you doing? All right. So again, thank you all for being here. Appreciate it. And if you are new, uh, please do subscribe. Hit that bell to be notified on updates and give us a thumbs up. Those thumbs ups, they really do go a long way for us, and we appreciate it. And you can always find us on social media. We are at silverbullion.com.sg. That is our website. We do sell gold, silver, precious metals, platinum, palladium, as well as nickel for electric vehicle batteries. It's getting to be a big thing. But more than that, we also specialize in wealth protection, systemic wealth protection. So, as I always say, if you guys already know what's going on out there, uh, options are important. And, we do have a few items or a few products and services that can help out in the way of systemic wealth protection. give us a call or shoot us an email at sales@silverbullion.com.sg, and we'll see what we can do. If there's a fit, we're absolutely going to help you out in whatever way we can. Silver Bullion SG is where you can find us on Facebook. Silver Bullion PL for Private Limited is where you can find us on Twitter. At Silver Bullion SG is our Instagram account. bit.ly/SBTV iTunes /SBTV Spotify is where you can find us for just the audio versions. bit.ly/SBTV iTunes and SBTV Spotify. And Crisis Tracker, if you have that Telegram group, or even if you don't, that Telegram app, I should say, go ahead and download that app and search Crisis Tracker, one word. And this is where we go ahead and we'll post related news items to financial news, economic news, gold and silver news, whatever, whatever typically affects us or may influence the way we think or see things. We'll go ahead and put it there, sift through all the riffraff, and hopefully make things a little bit simpler for you. So, Crisis Tracker, go ahead and search it out. One word, Crisis Tracker, on that Telegram app, and hope to see you guys there. So, again, how's everyone doing? Thankful that you all could be here. 49 Fine, how you doing? Mr. Nguyen, how you doing? Happy holidays as well. Carl Sittler, how you doing? How you doing? Okay, so all right, let's get rolling. Upcoming guest is going to be. Computer's a little bit slow today. I think it's already on holiday. Upcoming guest is going to be Dr. Marc Faber and Rick Rule. Okay, so two great guys. They always give great interviews, so it's going to be something to look forward to. Dr. Faber was born in Zurich, Switzerland. He went to school in Geneva and Zurich and finished high school with the Matura. He studied economics at the University of Zurich and at the age of 24 obtained a PhD in economics magna cum laude. Smart man. After working in New York, Zurich, and Hong Kong, in June 1990, he set up his own business, publishing a widely read monthly investment newsletter, the Gloom, Boom, and Doom Report, which I think most of you are familiar with. It highlights investment opportunities, and Dr. Faber is well known for his contrarian investment approach. And we're going to have Rick Rule, highly experienced investor and speculator focused on sub-billion market capitalization, public and private issuers in natural resource industries. Rick has structured, led, and participated in hundreds of privately placed debt and equity issuances for resource companies operating internationally and, of course, in the U.S. He's a sought after investment conference speaker as well, having presented at hundreds of resource and investment conferences all over the last conferences all over the world in the last 30 years. So looking forward to these two guys. In fact, because of the schedule, we did talk to Dr. Faber, and what I'll do is I'll put a few clips from the preview or a preview of this interview coming up. So again, these are the upcoming guests, and we'll move over to our ebook thank you, or in fact our gift card, thank you. Slight change. We're going to be offering these $10 Amazon gift cards for our winners. And if you'd like to get one, download the Kindle app from your phone or tablet's app store in case you want to switch to an ebook or we switch to ebooks. Be one of the first 5 to answer correctly in this live stream before the timer runs out. US winners, you're going to be given a link to download the ebook or the gift card. And if there is trouble, just go ahead and contact Amazon and let them know what you want to do if you need to transfer it into a different currency or whatever it is. And you're going to have to provide us an email address during this live stream with no other messages in the email. We'll try and mute it if we can, but I think YouTube changed something where it may not be able to. We may not be able to mute it, but we'll see how it goes. But first, you got to win, right? So let's see if you can go ahead and win that gift card. Question is going to come from Craig Hemke's interview. According to Craig Hemke, it's in the blank markets that price is discovered. So if you watch that Craig Hemke interview, you're going to know the answer to this. If not, try and you may be able to eke it out. You may be able to guess it. So according to Craig Hemke in that interview, it is in the blank markets that price is discovered. Just go ahead and take a shot. Yeah, Patrick Bateman, two legends indeed. I tell you, Faber and Rick Rule, that's a pretty good combo for sure. So go ahead and take a crack at it. Mr. Nguyen, free. It's in the free markets at prices discovered. You know what it is, but it's not quite there. Paul, future. What else we got? James Richter, physical. Harold B, future. Uh, DC Precise, free. Mr. Nguyen, commodity. Let's see what else is out there. Patrick Bateman, Bond. All right, let's keep going with that. All right, James Richter, black market. It may as well be the way things are going, right? Black market. I like that one. Um, meat open, free. Okay, what else is out there? Got 10 more seconds. Let's see what else is out there. Bond market. Carl Sittler saying bond market. Who else we got? All right, the answer is futures market, and there's my green screen. All right, gotta fix that one. So anyway, it is going to be futures. So let's see, futures markets. Hang on, I think we got Paul. Paul got it, and then we had Harold B got it, and we had James Richter who also got it. So three guys who got it in the right amount of time. And just to make sure that we got it right, we'll go ahead and revisit that Craig Hemke interview. So three guys we're looking at. James, sorry, not James Richter, not Black. We're looking at Harold B, future. Paul is also future. And let me see if anyone else out there got it. I think that's it. Just those two actually. Okay. Yeah. So those were the ones that came in before time ran out. And just to make sure, we'll go ahead and take a look at the Craig Hemke interview.
Why do I want to care about holding gold and maybe, in a really good year where the banks play defense, it goes up 20%, when I can just buy friggin' Tesla or some other meme stock and make 20% in a day or a week? So it's really hard to fight that prevailing sentiment. This notion that nobody needs diversification, nobody needs safety, nobody needs a balanced portfolio, man. Just plow it all into that Kathy Woods ARK fund, and let's make as much fiat as we can. That is still the prevailing sentiment, and that is something that, we just keep fighting. People are still stacking gold. A physical demand remains really strong. I mean, there's just not enough demand for all of it in all its forms, particularly in the futures contracts. It's in the futures markets that price is discovered, if you will.
Okay, so what do you care about holding gold when so many other things have gone up quicker and further than gold and silver? What do you care about holding gold? Is gold only about price? What's why do you hold gold? I mean, it is true there are other things that absolutely have been doing better as an investment than gold lately. So why do you hold gold? Is it all about price? I'll play another clip from Craig Hemke. I just need to adjust some sound here for some reason. I'm not getting sound coming out of the clips. So we'll move on to something else that Craig Hemke said. But what do you care about gold? Is it just about price? So we'll play one more clip from Craig Hemke.
It's a real jam that we're in. All the stuff that they tried to do in the 80s, they can't do today. So we'll just, we ride it out. We buy the physical metal on the dips, knowing that it's our protection for when those plates all finally stop spinning again. I don't know what next year's going to bring, Patrick. We got another election here in the U.S. It's going to get crazy. If you thought 2020 was crazy, so we'll just ride it out and understand what's going on. Like I said, all this statistical nonsense that they try to do. Understand the value of my precious metal doesn't change. The price changes in dollar terms, but the value of it only goes up every day. So I'm going to keep buying it, and we'll just keep riding the storm out, my friend.
All right. So it is true. We don't know what the future holds, but we know what the future will bring. And that's going to be some craziness. That will be craziness indeed. Good craziness, bad craziness, who knows, right? The value of precious metals, though, they do not change. It doesn't change. An ounce of gold is still an ounce of gold. That does not change. The only thing that changes is the price relative to dollars or whatever else it may be, but it's still 1 ounce of gold. That never changes. And I'd like your help with this one, though. What is the value of precious metals? Because that is one thing that I think we often lose in the price of precious metals. What is the value? So I'll take a look at some of the comments here. Um, Jay Delaney, I'd rather hold gold and silver, especially when this economy can crash at any time. Absolutely, that's value. That is value right there, with the certainty. Waka waka. I hold gold for insurance and the hedge. Absolutely. Again, that is value. If your assets can do that for you, that is extreme value. So it is more than just price. Absolutely. I'll play another clip from Craig Hemke, and then we'll move on.
All of the macro stuff that I began the year with forecasting, stagflation, surging inflation, Fed not being able to allow rates to go up, so sharply negative real yields. All of that stuff, Patrick, has been right.
Yeah,
and
absolutely.
Nonetheless, price goes nowhere. Team transitory has been in charge the whole time. Yeah, real yields might be negative 5%. No, that's okay. Eventually, rates are going to go back up and inflation is going to come down. We even had a period within the last month where it looked like we were finally shaking that off, and then slammo, we go back down. So it's been a very difficult year. Next year, man, just for a whole number of reasons, I think is going to be wildly unpredictable and volatile.
Yeah, absolutely. Despite what we see with our eyes and ears, or what our eyes and ears are telling us, despite what our logic, our thought, and mind is telling us, precious metals should be going up. But why isn't it? Why hasn't it been going up? I mean, should you care that everything else seems to be going up except precious metals? If you understand the value of it, perhaps not. And then we had Silver Bullion and Safe House founder Gregor Gregerson, who also came on. He stopped by and wanted to say a few things before year's end. So we'll take a look at the Gregor Gregerson interview. Okay, so here we go. Hang on. Okay.
In a world where everybody looks at the United States and the US dollar, and where the US dollar essentially is willing to print as much money as it takes, it's getting quite hard to have traditional financial crisis, because in a normal system you have a boom and you have a bust. And the bust is very important because it clears the economy from companies that are not doing well. And people compare it like a forest fire, which essentially allows for new growth to come up. If we constantly print so much money, we bail out people, we create a weaker and weaker economy. And over time, we create a weaker and weaker reserve currency because we are printing so much money. And when so much money is being issued, at some point, people might start doubting the value of that money.
Okay, so the Federal Reserve has intervened so much. We all know this. It took away the normal boom and bust cycle. I think we'd all agree there. And this keeps some businesses alive that should be gone. That quite frankly should be gone. And it takes the ability for money to move where the market wants it to go, and the market being you and me. Okay, it stops innovation for people and removes the integrity of a country. I'd have to say that absolutely does happen. And as a result, people all over the world, including in the US itself, they start to doubt the currency. They even start to doubt the government, perhaps even the country as well. A couple more clips from Gregor.
Our financial system is based on, is controlled by the United States because the US essentially controls the SWIFT wiring system, which is how wires are transferred from one bank to another bank. And that gives them an enormous amount of power. As long as that power is not being abused, it's worked quite well. The US has followed a policy of talk softly and carry a big stick. And the big stick was a big military, but it was also the control of the SWIFT wiring system. The problem is that nowadays the United States is yelling and really forcing countries to do things against their will oftentimes, and using that stick, that SWIFT banking wire threat to make countries do things, which then creates resentments. And in the banks, the financial institutions, the countries, where these things are being pushed through. An example, for example, recent one is Carrie Lam in Hong Kong. Carrie Lam is essentially the president equivalent of Hong Kong. And Carrie Lam was put on a sanction list by the US because of the way she runs Hong Kong. And whether that's justified or not, that's a different discussion. But the point is that Hong Kong banks had to close the bank account of the president, of their prime minister equivalent, and because a foreign power says so.
Absolutely weaponizing the dollar, as Mr. Nguyen says. So what is interesting here is something we have been talking about for a while, I think even since 2019, and that being Instex, the instrument in support of trade exchanges. And what is Instex? It's Europe's answer to the US SWIFT system. Okay, so there is a system already out there, and I understand it's already functioning, or it can already work. And this is a way to transact internationally outside, again, of the US SWIFT system and outside of US reach. You see, and I've said this before, you don't, or perhaps you may not even need a dollar collapse for a new currency to take over. You just need a non US way to transact. I mean, think Bitcoin, things like that is transacting outside of a SWIFT system. And that's what Instex does. And that's what, again, what cryptocurrencies do. So they allow you to buy and sell outside of the US, outside of the US dollar anyway, and outside of any central bank. And take it a step further, for people looking to barter, to transact with their gold and silver, and I've also said this before the past few live streams, when things really hit the fan, and you know what I mean, when what is going to hit the fan, having a good, solid gold backed token is what is going to be able to make your gold and silver a currency to be able to use in a transaction, to be able to use in some way to barter. I mean, when real estate crashes, and we're in a time where no one wants US dollars, let's just say as an example, a seller may want gold for his house. He may want silver for his house, and you have gold, let's say, to buy his house. He's willing to accept your gold, but you need to be able to transact. And that's one of the keys. I know it's not easy for a lot of us to even consider a gold backed token or anything like that. Don't think about the token. Think about how can you transact with your gold or silver. How can you trade or barter with it? Because that's the key point. Another clip from Gregor Gregerson.
Silver bullion itself is providing liquidity for gold and silver, but we have a subsidiary, which is a safe house, which is essentially our vault operator. And we are different in the sense that typically in this industry, you are dealing with a bank, a bullion dealer, or some other wealth manager who then deals with you and essentially outsources storage of physical, if there is physical, to a third party vault. And that's pretty much how the business evolved. We've gone a different route because of any government jurisdictional issue, and we built our own vault. And we basically integrated Silver Bullion, the vaulting company, and recently we have bought our own 180,000 square foot building, which is basically housing all of this. And the combination of this essentially means that we are a single counterparty. When you're dealing with us, there's no middleman, there's no complex jurisdictional sort of exposure, because we're all doing it in-house, and our only material exposure is to Singapore. So you're dealing with a single country jurisdiction, and you're dealing with a single counterparty.
All right. So in many cases, and this is true now, in many cases, when you buy your metals from a dealer and you store with him, your dealer is most likely, not always, but I'll just say most likely, placing your bullion in the hands of another business, a vault. They're giving your metals to them and saying, "Hey, take care of it." And essentially, you have a now you have a third party storing your gold and silver. And that vault stores on an as said type of an as said basis, where if you tell them you're storing gold, they just say okay. You tell them you're storing diamonds, okay. You tell them you're storing whatever it is, a painting, okay. They don't check if it's legit, if it's genuine, if it's real. They simply say okay, and that's the end of it. But with silver bullion and the safe house, the vault actually checks what's going into it. We're making sure if it's gold, it is gold. If silver is going into it, it is silver. So we absolutely check these things and make sure it is what it's supposed to be: platinum, palladium, gold, silver, whatever it is that's going into the vault. We're going to make sure we know what it is. It is true. Identify it, segregate it for ownership. You own it, it is yours. And this is why our peer to peer system, this is why it works. Okay. It works because we know that your holdings are real and it can therefore then be used as collateral. So, this is why, again, another reason why we also check. Plus, you have peace of mind. It's a genuinity guarantee that if you bought gold and it comes into the vault, we're going to check it, or the vault's going to check it, and they're going to make sure if it's supposed to be gold, it is gold. So that is another advantage of storing with silver bullion. So I want to move on to a preview of the Dr. Faber interview. Our schedule got a bit mixed up this week because of Christmas, but I'll give you a preview of some things that Dr. Faber had to say.
This will be very interesting to see at what point they will taper. My view is the stock market goes down on the major indices S&P 15%, the Fed will step in and start easing again. And the history books, they will say, well, the Fed had to ease because of COVID. Nonsense. They started to ease in August, end of August 2019, long before there was a COVID.
All right, so Dr. Faber expects a 15% correction, and the Fed will start easing again. What are your thoughts on that? I think we all know what the Fed's plans are. In fact, we'll go ahead and take a look at it later in the show as the main topic. What do you think? Do you think the Fed can pull a rabbit out of the hat, or more rabbit holes are just going to be created? But again, 15% correction is what he expects. Fed will start easing again. And he also says that the Fed actually really did start easing before the bug. What are your thoughts on that? I mean, I think you can reflect back to late 2019. I think it was September 2019, where we saw the repo market blow up. And now we're seeing the reverse repo market blowing up 1.7 trillion last time I checked the day. So according to Faber, he believes these things happened well before the bug, and I'd agree with that. I think most of us would. They were already in trouble there. So another preview clip from Dr. Faber.
The Federal Reserve and other central banks have, by printing money, allowed the government to grow like a cancer. This is destroying the economy, the capitalistic system, nothing else. The central bank is a completely uncapitalistic development, because in a free market economy you would have hundreds of banks, and Milton Friedman pointed this out. The banks then issue their own money. The good money will be strong and the bad money will disappear, and so forth. It's like nowadays you have hundreds of cryptocurrencies. 95% will disappear. They will end up with zero value. But one or two will have value. But I doubt the one that will be valuable is issued by a central bank.
Dr. Faber making another great point there. Central banks have allowed banks to be cancers. Central banks have allowed banks to be cancers. Sounds about right. The central bank is a completely uncapitalistic development. Could be because, like you said, before that we had banks all over the place, and central banks came in, and basically now they all fall under one umbrella. And in the free market, you would have hundreds of banks, which is what we just talked about, which is what he referenced. Dr. Faber referenced with cryptocurrencies. You have a whole lot, and you're going to have a whole lot that probably are going to fail or may not really mean anything. So you absolutely got to know what you're getting into, and do your homework and research them. There will be winners. There absolutely will be winners, and you're going to be one of them. I have complete faith in that. You'll be a winner too. One more clip from Dr. Faber.
Capitalism destroys itself because it becomes too successful. This is the only philosophy or religion in the world that has created widespread wealth. around the world. If you go back 5,000 years of history, never has the poverty rate been this low as it is at the present time. Now people say, yeah, Bezos and Zuckerberg and Bill Gates are very rich and we are poor compared to them. Never mind, they are rich because better they are rich and you have a decent standard of living than that everybody lives in misery like under socialism. After introducing market reforms, the standards of living everywhere and for everybody went up without exception.
Dr. Faber making a great point there. Capitalism destroys itself because it becomes too successful. I would think it destroys itself when you start entering the realm of crony capitalism and things like that. That's when capitalism starts to destroy itself. When you have politicians who become corrupt and are looking to fill their pockets, that's when capitalism becomes starts to destroy itself. Only capitalism has created widespread wealth around the world. He's got a point there. He's got a point there. Socialism, communism, you're going to be flat all across the spectrum. Capitalism, you have your peaks and valleys, but it has spread wealth across the world for sure. And better that some people are rich and you still have a decent standard of living than everyone lives in misery. And he's referring to, if you really want to level things out, bring socialism in, and again flatten everything out. Uh, and he does know socialism. Faber does know socialism. Socialism, you're looking at living in misery. So he has a point there. It's not a popular point for sure, and there are a few things that he says that are not popular. But once you take a step back and you look at it, you realize that you know truth doesn't have to be popular. It just needs to be truth. Or take a step back, look at it from a different perspective. So we'll see um, what else he has to say. So make sure you subscribe and hit that bell to be notified when that interview comes out. What are your thoughts on these? Let me go ahead and take a look at some questions here. Faith's RV trip storage location is in Singapore, and we also the safe house. It is an entity of Silver Bullion. So when you talk to us, you're not talking to or when you store with us, you're not storing with necessarily, or not even with third party vault. It is our vault. So when you talk to us, you are talking to the people that know what's going on with the vault, that is getting the proper insurance for the vault for your precious metals. So uh shoot us an email, sales at silverbullion.com.sg if you want more info. Let me see what else is out there. Oh yeah, there we go. So yeah, my colleague Vincent already got that there. The vault is in Singapore. So thanks, Vincent. Let's see. Um, and Tweety Bird, that is true. Get out of debt and you won't be in misery. That is true. Um, let's see. Um, I think it was SB video speaking about China doing what Roosevelt did, and it made a lot of sense. Trying to recall that one. If I can recall that one, I'll get into it. Let me see what else is out there. Let's see. Okay, throttle. It's not capitalism that destroys itself. It's allowing the crooked politician, absolutely, to do whatever they want and get away with it. And as angry as some of us might be with politicians, wherever we are in the world, politicians anywhere in the world, we're the guys that put them back in office. So we gotta. If you're really upset, you can hopefully be able to do something about it. Hold people accountable. Put people's feet to the fire. If you don't believe what's coming out on the media, make it known. Do what you can. There's, you know, I, people. I've heard someone say this a lot of times. People are under spell right now, and got to do what you can, to help them snap out of it. But they're under spell. They're smart people, and but they may think we're under spell as well. So who knows, right? It goes both ways. You just got to sift through the information, sift through the riffraff, and hopefully get to that truth. So we'll move on to Gerald Celente Trends Journal. Three things looking at market bust coming. The ECB bond buying have negative effects, and metaverse can't seem to get away from this metaverse. So companies leaders are selling their stock at record rates, some for the first time ahead of possible hikes in capital gains rates, other changes in tax structures, and the growing likelihood of a stock market correction, according to the Wall Street Journal. And this year to date, 48 corporate leaders, get this now, 48 corporate leaders have each raked in at least 200 million through stock sales, about 4 times more than the usual yearly number from 2016 to 2020 or through 2020. The total taken out in November alone was 15.59 billion. The list of those who collected include cosmetics heir Ronald Lauder and Meta Platforms Mark Zuckerberg, or as Faber would say, Zuckerberg. I like how he says it. Members of the Walton family, meaning Walmart, collectively cashed in about 6.5 billion worth of shares this year after Walmart posted rising sales in each of this year's first 3 quarters, and their company shares hovered near record prices. Microsoft CEO Nadella sold half his company stock last month, collecting 374 million. Google founders Larry Page and Sergey Brin each have sold about 600,000 shares. 600,000 shares this year in parent company Alphabet, each grossing almost 1.5 billion before taxes. Michael Dell from Dell Technologies sold 254 million in shares. David Rubenstein, co-chair of the Carlyle Group private equity firm, unloaded 11 million shares of his company in return for 495 million. Among S&P companies, company higher ups have sold a record 63.5 billion in shares this year, more than 50% increase compared to 2020. Tech bigwigs led with 41 billion in cash outs, followed by corporate leaders in the financial sector. The mass sale is unprecedented, according or accounting professor Daniel Taylor at the University of Pennsylvania's Wharton School of Business told the Wall Street Journal. The current rush to the cash window, cash window resembles the waves of sales as the dot-com boom busted back in the early 2000s, he said. So we need to keep an eye on this for sure. ECB bond buying having negative effects. European Central Bank, or ECB's the program of buying bonds since 2015 to prop up the Eurozone's economy, is beginning to show more negative effects than positive ones, says Isabel Schnabel, in charge of the ECB's market operations. This was said last week at the European Systemic Risk Board's annual conference. Buying bonds has been an important tool during periods of economic turmoil, she said, but the cost benefit ratio deteriorates as the economy gains ground. Continuing the bank's monthly bond purchases, which have given the bank a current portfolio of 4.6 trillion euros in government debt, create a moral hazard. So finally, someone is using that word with what central banks are doing, moral hazard, by lulling investors to depend on the bank's largesse and lead to excessive risk taking and overvaluations and creating a shortage of government bonds, and has been the case, or as has been the case in Germany. So getting to the metaverse, we just can't seem to get away from this. Elon Musk, the world's richest man, drew the ire of wokeism again this week when he opined that the biggest threat to humanity is the declining birth rate, warning that civilization will crumble if people don't start having more kids. Okay, so you all know what to do this Christmas, right? In remarks to an annual Wall Street Journal CEO Council meetup, Musk said, I think one of the biggest risks to civilization is the low birth rate and the rapidly declining birth rate. And yet, so many people, including smart people, think that there are too many people in the world and think that the population is growing out of control. It's completely the opposite. Please look at the numbers. If people don't have more children, civilization is going to crumble. Mark my words. These days, many elites tag climate change as a reason why human activity and procreation must be more and more tightly controlled. You get that, tightly controlled. But the idea is hardly new. In the 18th century, Even as the Industrial Revolution was creating unprecedented new efficiencies, Thomas Malthus predicted that the boon of Industrial Revolution would lead to an untenable population explosion. And in the 20th century, eugenicists like Planned Parenthood founder Margaret Sanger were consumed with the idea that overbreeding, overbreeding of inferior peoples would dilute and potentially destroy human advancement. New York Post article on Musk's comments noted that in July, Morgan Stanley, Morgan Stanley, analysts attributed the declining birth rate in the U.S. to concerns related to climate change. The analyst said movement to not have children owing to fears over climate change is growing and impacting fertility rates quicker than any preceding trend in the field of fertility decline. Morgan Stanley analysts said in a July report, get this now, having a child is 7 times worse for the climate in CO2 emissions annually than the next 10 most discussed mitigants that individuals can do. The analyst said, noting that many would be parents are foregoing family in an effort to reduce their carbon footprint. So get that. So that was a look at Gerald Salente's Trends Journal. Well, what do you guys make of all of that? People afraid climate change, not having kids anymore. Metaverse, just when you dig into this whole metaverse thing and you go more and more into it, I don't know. I don't know what you guys think about it, but I'm not entirely sold on it. I'm not even shopping for it. But metaverse, ECB calling it a moral hazard with what they're doing. So finally, you have a central bank or someone who calls the central bank out saying that they are creating moral hazards. Um, pretty pretty telling things there. And then you have CEOs who are or higher ups who are getting rid of stocks. They sense something coming. So absolutely, they sense something coming. So let's take a look at some comments here. Yes, carbon units. We've been hearing this for how long already? Um, let's see. Uh, okay, let's see. Well, I guess you guys are doing okay. You guys got a pretty good conversation going there. I mean, let's just run over and take a look at our website, silverbullion.com.sg. Let's see. Silver price currently right now 22.52 up here in the top left corner. So 22.52. Gold price 18.02. So it's clearing that 1800 level. Let's see for how long if you can hold that. Gold to silver ratio, we are at 80. This is absolutely screaming right now. If you're deciding to buy gold or silver right now, this is screaming at you to go ahead and buy silver. Silver is definitely undervalued compared to gold right now. So when you look at the ratio, it is time to buy silver. And this does move. It'll go up, it'll go down. And but what people do is they play this ratio. There's a time to buy silver. There's a time to turn that silver into gold. There's a time to turn that gold into silver. Right now, we're looking at silver is where you may want to be at because it is extremely undervalued. Some featured products here again. This is what we do have: kilogram gold bars, 1,000 ounce LBMA bars, 100-gram gold bars. These three are pretty popular. I should say actually the third one is very popular. 1,000 ounce LBMA bars, they are good if you want to get the lowest premium for silver. As you folks already probably know, the bigger you go, the less the premium is. So this is why a lot of people they like these 1,000 ounce LBMA bars. And then of course the standard coins, maples, kangaroos, Britannias, eagles, things like that. But taking a look at the LBMA bar, if you are an investor looking to get in silver, you want the lowest premium possible. This is what you would want to be looking at. I have it in USD right now. There is, we do have in the vault, I should say, 352 in the vault. We could always transfer over to the shop if you guys in Singapore want to actually come down and pick it up. But we do have 352 of these bars in the vault ready for you to buy and own. And to do that, you would have to sign up as a Silver Bullion user. We have 6 different types. You can sign up as a personal account, where it's just you. A joint account can be you and your spouse. Trust account. joint account with a minor. This is pretty popular if you're a parent looking to do something for your children. Joint account with a minor, business account, and of course, precious metals IRAs, the retirement accounts. As an example, with the personal account, it's just basic information. You would then fill out an application and go ahead and scan your passport or some type of ID and send that to us. It's as simple as that. There are no maintenance fees to go ahead and create an account. So it's an option. And as I say, we all are going to need options. So basic information, your name, your country you're in, your preferred currency. This is in case you want to sell it back to us while you have it in storage. You want to sell it to us, your preferred currency, so we know what to give you. And of course, your country of nationality and references. Absolutely do let them know. Let them know. Hang on here that you found out about Silver Bullion through YouTube, SBTV. Let them know that. That helps us out a lot. And you would probably would want to tick this box here. Secure notifications. What that is if you email us or I should say, if we email you, we need to contact you. All you'll have in your email is just you have a message from us. It doesn't say what it is. We don't put anything in the body of the email. So that way, all these algos, you never know what they're doing nowadays. They won't be able to see what's in that email. So that is a good option to select for sure. Moving over to Twitter. Let's see what's going on in the Twitter sphere. Jim Bianco from Bianco Research. Inflation is a true game changer, and too many are in denial about this. So the Fed responds too slow. Who gets hurt? See below. Given this, what will be more important in 2022? The Democrats or the stock market? All right, interesting there. Both cannot be saved. Uh, okay, it's all right. Bianco's giving his opinion. And this is when you've officially become a banana republic. I saw this, and what else can you say? Where House Speaker is saying um, that Congress should be able to go into the stock market, and this is a bit troubling because they're the guys that set the policy, the rules, pushing for mandates and things like that. And if you're invested in something, of course you're going to push whatever it is you're invested in to become uh, something that's going to be profitable that people are going to have to use. So definite conflict of interest. This is when you are definitely your green banana republic is starting to turn yellow. It's getting ripe. It's really, really getting ripe out there. Um, and again, they all have, not all, but 75 federal lawmakers held shares of the bug jab. So again, you got to kind of wonder what's going on with this. Is it again, is it some type of let's just say you got to wonder about that a bit. Um, Better get it while it can be got. So this article here explains why Singapore the other week bought 26 tons of gold. They haven't bought gold or added to the reserve since 20 or the year 2000. So this was something pretty significant. So they go ahead and explain why they bought gold. Let me just take a quick peek if I can get to some of the. Hang on, let's. Okay, so let's see. So what might have prompted Singapore to make this rare move to increase gold reserves by 20%, as well as some factors driving interest in gold across the board? Uh, if the Monetary Authority of Singapore is expecting major currencies to depreciate, stocking up on gold could be a way of hedging against these risks. So here you go, another central bank who is stocking up on gold. You're seeing more and more of these central banks who are stocking up on gold as a hedge against these risks. Gold is typically denominated in US dollars, and the prices of gold and USD tend to move in opposite directions. So when the dollar starts to lose purchasing power through things like inflation, gold typically will do well. So when the US dollar dips in value, gold becomes cheaper in other currencies, demand increases, and the value of gold then appreciates. So Singapore, it is a rare move. It's on that bandwagon now and buying gold. Let's see if this will play. Something that Max Keiser said. For some reason, I've been having trouble with the audio, so let's
We're
hope
not
it
going to have a
works.
debt, 1930s debt.
Hang on, let me start this
We're
over.
not going to have a debt, 1930s debt deflationary depression because we're no longer on the gold standard. There's no anchoring of the economy to anything physical or anything that is real. It's completely phantasmagorical, and they've committed themselves to print money into death. So literally, the Chairman Powell is like a goldfish. He'll eat himself to death. They will debt themselves to death. Again, it's tyranny. And as far as China goes,
Okay, what happened
deflationary
there?
depression, to a war with China by
Hang on,
committed
let me
themselves to
go
print
back
money
here.
into death. So literally, the Chairman Powell is like a goldfish. He'll eat himself to death. They will debt themselves to death. Again, it's tyranny. And as far as China goes, America is willfully stepping into a war with China by putting China into an untenable position. And these debts and these obligations are completely failing. And this always leads to world war. This always leads to war, John. So that's another quiver in the case against this current administration for tyranny. Not only are they printing the money to death, but they're willfully bringing us into a world war because they're A, stupid, B, corrupt, and C, greedy. That's what we got. There's a remedy, for this. And every day we wait and to exercise our remedy, it's the shame on us, John. Shame on us. It's not the policymakers. They're the ones getting rich off the stealing of all this money. It's a shame is on us, John, for not exercising our constitutional remedy in this case, John.
Yes, I agree with everything you just said there, Max.
Okay, so Max Keiser having some pretty strong words, but what he said again, if you take a step back and hear what he says and look at things, uh, there is some truth in there, and he just touched on some things that we just touched on as far as when you have politicians who are doing what they're doing right now, it's a definite conflict of interest. Let's see what else is out here. Judy Shelton again. Man, we'd love to get her on. They were talking about how the Fed is going to, double the pace of tapering and whatnot. So I think we all kind of are in tune with this now. Let's see what else is out there. Jerome Powell is saying cryptocurrencies very risky. They're open to some foul play, things like that. So he has some things to say, and you're hearing more and more how the Fed is coming out against cryptocurrencies. We'll take a look at that. We'll touch on it as well. Bitcoin ATMs coming up all over the place. Guys, be careful. There are scams that go along with it. So if you have any questions, if guys are asking you, send me Bitcoin and instead of sending them cash, you may want to question and find out what's going on behind it, because there are a lot of scams. And Bitcoin ATMs, they are a simple way to get Bitcoin and transfer it over to them. So be careful. Jim Cramer, well, Jim Cramer's Jim Cramer. All this stuff in red is what his picks have been doing. So Jim Cramer, well, what can you expect? And this came out on Fox. So this is pretty interesting with what Tucker Carlson had to say. So I'll go ahead and play this from the beginning.
Why can't you afford a house right now? Simple, because Washington printed too much money. No one should be surprised by this. It's a cycle as old as money itself. Political leaders devalue the currency for short-term gain. In the end, this leads to long-term collapse. Debasing the coinage, that's what they used to call it. For example, by the middle of the 3rd century, the Roman denarius, the silver coin, was only about 2% actual silver. The rest of it was just junk. Within a few years, not incidentally, the entire Roman Empire blew up and the barbarians took over. Why can't you afford a house right now?
All right, let me
Simple,
pause
because
this.
Washington
Okay,
printed
so
too much money.
I'll end it there. Okay, so I'll end it there. So that was a look at Twitter. We'll end it there. Pretty interesting stuff coming out in Twitter for this to come out on mainstream. Let's hope it sticks. Let's hope it sticks, and let's hope people kind of catch on to what he's saying there. Let me take a look at some comments here. Tweety Bird, yes, absolutely. Whatever stocks Pelosi buys, you're going to get rich. So I think we all know, we're all starting to hear some things, starting to come up. But whatever she buys has been doing, it's been doing pretty well. Let's see what else is out there. Okay, hang on. Let's see. Um, Hang on, guys. I'm just going through the your comments real quick. I'm trying to catch up with it. Let's see. You guys are, yeah. Again, you guys are doing pretty well. You guys are having some great conversations, great comments. Appreciate that. BK Travelog, aloha. How are you doing? Um, yeah, Christmas tree. Well, it's a green screen. It's a green screen. I wish it were real, but okay. So anyway, let's move on to the topic of the day, and that is going to be Powell. Powell spoke, so we want to hear what he had to say, and I want to know from you guys, what are positive things in 2022 coming up, and what are some things that concern you in 2022 that are coming up. Uh, so go ahead and think of that, and we'll start by playing some things that Paul said and take a look at it.
Supply and demand imbalances related to the pandemic and the reopening of the economy have continued to contribute to elevated levels of inflation. In particular, bottlenecks and supply constraints are limiting how quickly production can respond to higher demand in the near term. These problems have been larger and longer lasting than anticipated, exacerbated by waves of the virus. As a result, overall inflation is running well above our 2% longer run goal and will likely continue to do so well into next year.
Okay, so there are supply problems. There are definitely supply problems, supply chain problems. You can't keep up with demand. There are bottlenecks. Supply problems are lasting longer than anticipated, and the bug is throttling the flow of production. It slows down. Guys go back into work. They start producing. Bug flies back in the factories again. They slow down. They go home for a bit, whatever it is, and then the bug flies away. They go back in the factory. So it throttles production back and forth. As a result, inflation is it's running hotter. It's running hotter than their desired 2% goal, and we will likely see it move into next year. This higher than 2%, and we've been saying this for quite some time where, the Fed has been trying to get inflation for a decade. What makes us think that once they get it, they'll be able to control it? So that's always been a concern. You asked for it, you got it. Now, can you control it? Well, we'll see. Here's something else that Paul said.
While the drivers of higher inflation have been predominantly connected to the dislocations caused by the pandemic, price increases have now spread to a broader range of goods and services. Wages have also risen briskly, but thus far, wage growth has not been a major contributor to the elevated levels of inflation. We are attentive to the risks that persistent real wage growth in excess of productivity could put to upward pressure on inflation.
All right, so price increases have spread to a broader range of goods and services. A lot of us remember lumber, then it was rental cars, uh, and then it's even used cars, new cars. We're seeing, prices in food, prices in houses. It's going up everywhere. I think you folks even see it in fuel, energy. It's all over the place. Okay, so it's escaped. That bottle is uncorked. Inflation is oozing everywhere right now. The wages have risen, but not contributing to inflation is what he says. You can look at that a few different ways. We'll see how that one works out. Rising wages, low supplies of products could push up inflation. Well, not could, it can, and it is. Okay, it is. Again, the supply chains are still, not to full capacity, and the Fed has printed so much money out there. Um, it's all this money is chasing the fewer supplies of goods and services out there, so they get bid up, and that really causes inflation as well. Powell expects inflation to drop and run closer to their 2% goal by the end of next year. We'll see how that carries out. Um, that's going to be interesting for them to bring it down to 2%. They're going to have to work some kind of a miracle, but let's see how that goes. There's another clip from Powell.
We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials, like food, housing, and transportation. We are committed to our price stability goal. We will use our tools both to support the economy and a strong labor market and to prevent higher inflation from becoming entrenched. We will be watching carefully to see whether the economy is evolving in line with expectations.
All right. So we will be watching like a hawk or a dove, who knows, or maybe even an owl already at this point where they're just going to be screaming out who, you know, who knows what to do because what we're doing isn't working. So I think we got to throw owl in there already at this point. Anyway, my question to you is it going to work with what the Fed plans to do? Is it going to work? Can you afford higher interest charges? Can you afford higher interest charges right now? Okay. And if it doesn't work, what do you think we will see the Fed do? If this doesn't work, what do you think we're going to see? What do you think we're going to see the Fed do? One more clip from Powell.
The Fed's monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee reaffirmed the 0 to 1/4% target range for the federal funds rate. We also updated our assessment of the progress the economy has made toward the criteria specified in our forward guidance for the federal funds rate. With inflation having exceeded 2% for some time, the committee expects it will be appropriate to maintain this target range until labor market conditions have reached levels consistent with the committee's assessments of maximum employment. All FOMC participants forecast that this remaining test will be met next year. The median projection for the appropriate level of the federal funds rate is 0.9% at the end of 2022, about a half percentage point higher than projected in September. Participants expect a gradual pace of policy firming, with the level of the federal funds rate generally near estimates of its longer-run level by the end of 2024.
All right. No change in rates. No change in rates was what we saw, was what Powell said. At the end of 2022, we are looking at a projected 0.9% effective funds rate. So they're looking at raising the rates. And I believe it's somewhere around 2.5% in 2024. So, yes, they are looking at raising the rates. The thing is, though, last time when we were at an effective Fed funds rate of 2.5%, the wheels came off. And when I go back and look at it, you can see on the left-hand corner in that circle is 2.5. That's the percentage. That's the rate, 2.5%. You come over to the right-hand side, you see those two parallel lines going downward. This is what's happened, okay, since 1990, 2000, 2010. The Fed funds rate has come down. It's been coming down. It's been coming down. And then you look at 2020, it's pretty much at zero. Let's just say it's at zero. And then you go into, again, 2020. And after that, and you're pretty much down there again with zero. So the thing is, if they even come back up close to that 2.5% rate, which is that first red horizontal line, that last peak, if they even come close to that last peak, there is just no way. I mean, if you look at that trend line, I think they're lucky if they even get up to 1.5 or 2%. So the Fed, really what they're trying to do, I mean, you can just look at it in a very basic, simple way, and it looks like it's going to be a very, very difficult, if not impossible, thing to do. And then you also look at the original QE back in November of 2008. This is the original in that red rectangle there. And then you look at that larger rectangle to the right-hand side. It looks pretty similar, the original QE to where we are today. And you notice that end of the first rectangle, that small rectangle, this is when the Fed, tried to adjust with QE and whatnot. And still, their total assets just went up and up and up. They tried to taper. They couldn't. They had taper tantrum. And again, we end up in this larger rectangle to the right. You can see it is exponentially bigger than that smaller rectangle to the left. So if the Fed fails, you can expect, or I would expect anyway, we are going to see just astronomical numbers coming up from the Fed as far as the assets, total assets, and it's just going to be amazing what they're going to have to do. And in fact, when you go back to 2008, these were the closing prices of the Dow back then before the original QE, 8,000. Okay, 8,000, 8,000, 8,000. So let's just say the Dow was at about 8,000 when all of this started. So if the Dow was at 8,000 back here, okay, 2008, 8,000, and the Fed pushed it up to where we are at about 35,000 today. I mean, this is how much the Fed has injected itself into the market. Okay, and it could be quite a tumble. So again, the Dow was at some 8,000 in 2008 with the original QE. Today it's at what 35,000 plus, and this is again how much we've gone into la la land. And why I say if you ever hear an economist say the word recover, run. If he says recover, it's just run because there's no recovery without the Fed intervening all these years, this decade long period of time. Is the Dow overvalued? I'd say yes and no. I'd say yes, it is overvalued, and no, it isn't, because with the Fed, it's dead. In other words, as long as the Fed is in there, it's going to stay alive. You know, it's really like weekend at Bernie's already. It's I don't know. Markets could really be dead at this point. So don't let I hate to say, it, but don't let that little old man Powell and that little old lady Yellen fool you. They know exactly what they are doing, and likewise, you and me, all of us should know by now what we need to do as well. It's happening. You know, it's happening very very slowly. That if you watch it day by day, you really might not notice. But if you take a step back and look at it over the course of time, um, you can see it's well underway. So it is well underway. Just start to position yourself in the right places. So many things in motion and underway. Again, what are your concerns? What are your concerns? What do you see coming in 2022? In fact, what are the positive things you see? Uh, let me know. Let me know. Let us know, because we all need some positive things to look at. I found this article here: 10 things, 10 things that kind of brings concern to the writer of this article. Let me go ahead and make this a bit larger so we can all see it. So 10 concerns, 10 scenarios that could rock the global economy in 2022. All right, so let's just run through this real quick. Worsening U.S. China ties. This is what Max Keiser was talking about in its latest risk report. The European Intelligence or Economist Intelligence Unit notes that the U.S. and China are vying for global influence. It's no secret here. In an extreme scenario, this could lead to a neutral stance becoming economically prohibitive for third countries, dividing China supporting and U.S. supporting economies. Full global economic bifurcation would force companies to operate two supply chains with different technological standards. Probability of this is high. Um, high. I'd agree with that part because we things need to be fixed. Things need to be cooler heads. Just need to prevail here. You know, need to admit to the wrongs that's been going on and turn them around and try and make things right. Anyway, U.S. stock market crash. This is also what they're looking at. Again, probability very high. Okay, so what we have here is the EIU notes that supply chain disruption, higher energy prices, ultra loose monetary policy, and the recovering economy have all contributed to a sharp uptick in U.S. inflation in 2021. If slow monetary tightening fails to rein in inflation, we know this is addressed now. The EIU says a rise in interest rates in 2022 may be necessary. We know that's going to happen. Given that U.S. stock price earnings ratio are currently higher than before both 1929, get that, the Great Depression, and the 2007-2008 crash, accelerated interest rate increases could be enough to initiate a sharp stock market adjustment. And this is what Powell was talking about. He wants to do it slow, but sometimes the markets just can't take it. We saw what happened when he just went up to 2.5% before. Market couldn't take it. Property crash in China. We know this happened with Evergrande, and I think there's also another company there. The size of the Chinese property giant Evergrande, their debt means a potential default comes with the serious risk of financial contagion. The EIU says many of China's real estate firms are similarly over leveraged. And again, I think there was another one that came out fairly recently which could possibly lead to a string of defaults. And again, financial system is intertwined. So what happens there could happen here. What happens here could happen there. That is true. Probability is high. So what do you folks think about this? Another one, tighter financial conditions. Inflationary pressures stemming from rebounding commodity prices could trigger interest rate normalization, which could feed into higher debt service costs for governments, ratcheting up pressure for aggressive pro cyclical fiscal consolidation that ultimately sets back the recovery of emerging countries. This probability is high. Okay, so this is high, and we are going to see this tighter financial conditions. And what they're also looking at, which could affect the economy next year, is uh, new insects, new insects flying into the world. This probability is moderate. I think we could almost change this to high, but anyway, they're seeing it as moderate. The pace of new insects coming in the world and their insecticides, the rollout of their insecticides is the main variable behind more positive economic forecasts, but more aggressive pest control. Pest control is they need more pest control. Otherwise, it could pose a serious risk to forecasts. So that is something that we need to think about as well. Widespread social unrest. This is something we're seeing as well, and it may get more and more broad. The um, the bug has had significant negative effect on incomes and quality of life, including in traditionally stable Western states and long-standing authoritarian regimes. Countries where political tensions are already high appear to be especially at risk, but so are those whose economies were hit the hardest by the bug. And this probability is very high. And this is true. I think we are going to see a lot of widespread and social unrest. Without a doubt, we already are seeing it. So this is very high. Absolutely agree. Conflict between China and Taiwan is something else that could shake up the global economy. Simmering tensions between China and Taiwan have increased in recent months. That is true. The EIU says Chinese aggression against Taiwan since late 2020 has raised the risk of military conflict in the Taiwan Strait, with the potential to drag in the U.S. Taiwan's backer. Probability low. Probability may be low, but still the chatter is dangerous. Again, it can incite people to do things. It can move markets. So just the talk of this is really something that can again affect the economic outlook in 2020. Let's see, and EU and China ties worsen significantly. Okay, and this is a moderate probability. Imposition in March of EU sanctions against China over human rights abuses in Xinjiang and retaliatory sanctions from China against 10 EU individuals and 4 organizations have led to a deterioration in EU-China relations. These developments may heighten European calls for EU-US cooperation over China. Probability moderate. I think you can put this on the back burner, because the one that's on the front burner right now heating up is of course what's going on with the Ukraine. That one it could be pretty significant. So this one I think put on the back burner. Ukraine is more pressing. That involves U.S., EU, Russia. It involves it involves quite a bit more people, and I shouldn't say quite a bit more people, but it is pressing right now. Extreme climate events. EIU warns that climate change models point to the risk associated with increased frequency of droughts. Intense heat waves have struck Canada and the U.S. this year. Greece, Turkey, and Spain have suffered devastating fires in recent months, and volatile weather, including a drought in Brazil, has already contributed to rising prices for some foodstuffs. Probability is low for climate changing events, but again, this is on the radar. I mean, even what we saw from the Jerusalem Trends Journal with the metaverse. So again, these are things that are on people's minds that could affect the economy in 2022. Lastly, an interstate cyber war. Given the much higher costs of direct military conflict and the difficulty in identifying perpetrators of cyber attacks, any military escalation is most likely to take the form of cyber warfare. The shutdown of a national grid, for example, would severely disrupt business operations, creating uncertainty that would weigh on investor sentiment. Probability, the probability is moderate. So that one, we're hearing more and more people talk about this whole cyber. I think Klaus Schwab, he talked about cyber threats. Jerome Powell talked about cyber threats, and we'll take a look at a clip that Jerome Powell said. But first, even also dealing with the bug and the new insects, the new insects that are circling the globe. Powell even had something to say about that.
It's the emergence of a new variant that could, that could lead to significant economic. If there were to be a variant, for example, that were quite resistant to vaccines, it could have another significant effect on the economy. We don't see that. We don't have any basis for thinking that the new variant that we have is that one, but it's certainly one we're looking at.
Okay, so that kind of bothers me because to me, they're giving themselves an out. Is this enough for the Fed? Hey, we didn't see this coming. It's not our fault. So is Powell giving us an establishing shot already with this with the new insect coming around? They're giving themselves an out. Here's another clip from Powell.
I would say, cyber risk, the risk of a successful cyber attack is, for me, always the most, one that we would be very difficult to deal with. I think we know how to deal with bad loans and things like that. I think more a cyber attack that were to take down a major financial institution or financial market utility would be a really significant financial stability risk that we haven't actually faced yet. So I could go on with a list of horribles, but I think that's a decent picture of where I would start.
So he can go on with the list of horribles. Of course, he could. Is a cyber threat coming? And is it another out for the Fed to say, hey, not my fault? It's not my fault. We didn't see this coming. Is it another establishing shot? So we got these things with the new insects that may come around. We have these things with cyber threats coming around. Seems like they're already starting to set up their outs and or establishing shots. So again, get yourself some options. Know what your options are. Find options. That's the best thing you can do right now is to find options for yourself. All in all, though, I would say this: we've been given fair warning for a very long time. We have been given fair warning. Be thankful. Be thankful we are blessed to see what's going on. Be even more thankful that we have time to do something. Maybe getting a little bit shorter. Who knows? I can't tell you. Certainly can't tell you when all this is going to happen. But better late than never. I think Carrie Ellen Wilder said better to have your gold and silver now ahead of time than try to scramble and get it. Try to scramble and get it later on. So I just want to touch on one last thing regarding inflation. No matter what the Fed does with inflation, it is what it cannot do that is of concern. See, the Fed can print money, absolutely, but they can't print food. They can't print food. They can't print clothes. They can't print energy. They can't print oil. They can't print any of these things. These things are produced, not printed, and they take time to produce. So I just want to take a look at this website here, just to give an example here. Hang on. China's record factory inflation poses another threat to supply. This is a little bit dated. It did come out in October, but this is just to give us an example of what I'm saying here. Let me make this a bit larger. The cost of goods leaving China's factories is surging by the highest rate on record, stoking fears about stagflation in the world's second largest economy at a time when it is already grappling with an extreme power crunch. Remember, we talked about how China was having a hard time getting energy about a month back or so. Okay, extreme power crunch and deepening debt woes. We see what's going on with their real estate markets as well. Producer Price Index, which measures the cost of goods sold to businesses, soared 10.7% in September from a year ago. Again, this is in October. According to government data released That's the fastest increase since '96 when the government began releasing the data. Okay, let's just say it's getting more expensive in China, with the factories with producing goods. The supply chain is not back up to full speed. And I want to take you to something that you don't really hear people talking about. This is Harpex. Okay, what Harpex is, it takes the average of all the shipping for consumer goods like your TVs, your mobile phones, things like that. They're all shipped out right on containers, different size ships, smaller ships, larger ships, but this is the average price. So let me go back to 24 months. So you can see here in January of 2020, when all of this first kind of hit, the price to get a to ship, the average price came down because no one was really making anything. There was really no demand for ships, so price came down. Then it opened back up. Things were being produced. Shipping was in demand. People wanted things. They needed things as quickly as possible. The demand for shipping went up. The average price for shipping went up. And then now we're kind of tapering off here. But this is what we're talking about, because with all the money that's printed, that the Fed has been printing and throwing out there, we are still chasing goods and services that are not up to the pre-bug level, and this is pushing prices up. You can see this in shipping, and this is going to translate over into when you want to buy things at the store. But this is kind of telling right here. There's no manipulation in this. This cannot be manipulated. So you can see the shipping prices went up. Demand is there. The world wants things, but as an example, can China produce enough of it quick enough, especially if they have more slowdowns with new types of insects that may fly around. So even if the Fed tapers, raise rates, try to control inflation, the Fed cannot control the quantity of products coming out of China or other exporting nations. They can't control it. So, and this is, I admit, this is kind of a big fear for me, because if the Fed they go ahead and they do all of these things, taper, start to raise rates, but yet the demand is still outpacing the supply. What is the Fed going to do at that point? I would suspect inflation is only going to get worse. So, again, what happens if they raise rates? Doesn't bring down inflation and you still have a shortage. I think you're going to see a battle royale happening in the States on a level that not even Vince McMahon could have even dreamed of. You're going to see incredible things that are going to happen. Prices will continue to rise, and people would have a hard time being able to afford things. And there could be some real volatile times ahead that are coming or looming. So although, if you position yourself right though, and you understand wealth protection, again, you give yourself a chance, your family a chance, your friends a chance, I think you're going to have a very Merry Christmas and a Happy New Year. I know we're trying to connect the dots here. Hey, Patrick, you just riled us up here, and now you're saying Merry Christmas and a Happy New Year. I know. But the point is, we have options. Find out what they are, and if you haven't started moving into these options, begin. You know, go ahead and begin. It's important. It's important that you do. Let me scoot over here. So that'll end the main topic of the day part. I'll move over into the commentary, but I just want to take a look at a few comments. Um, let's see. Um, hang on now. Um, okay. Well, you guys are so diverse. You got a lot going on here. Give me something positive, guys. I want somebody to give me something positive for 2022. Give me something positive. Jay Northrop, yes, that is true. Pre 64 dimes, quarters, halves are 90%. Those are 90%. If you're as old as I am, you remember these when you were kids, um, at least circulating, around. I think I told you folks a story where, my mom would dump out the piggy bank, and we would go through the coins, and she would tell me what they were when I was a kid. She would pull those coins to the side and basically let me know that they were pretty special. And today, as an adult, I know why they were special. absolutely know why they were special. So let me take a look at the comments again. Somebody give me something positive that we're going to see happening in 2022. Let's see now. Running through these comments. Something positive. 49 fine. Happy holidays. Enjoy the 2022 crash. Okay. Harold B. SBTV goes back to weekly. You know what? I keep saying this. We'll think about it. Hey, even I admit, going bi-weekly, it got to shake some rust off. You get back in this chair, try to shake some rust off and get this program going again. So we'll discuss it for sure. Absolutely. Appreciate that. Thank you, Harold. Um, let's see. Enjoy the decline. Um, add chickens to my add chickens to my flock. I guess when you're farming chickens, I guess. Okay, let's see what else is out there. 2022, Adam Schwartz, silver price explosion. That would be nice. But if it does, I would hope that a lot of you had time to move into gold and silver, and I would hope that supplies aren't delayed, because you can imagine if a lot of people move into gold and silver, what is delayed now is going to be even pushed back further and further and further. And I think it might discourage people that want to get into gold and silver, but they're going to see that, oh, this thing is 2 months out. I got to wait 2 months to get my gold and silver. I think it may discourage people. And why I say that is because, I mean, if you're a week out and then a lot of people start buying, maybe what you had coming in a week, you know, that you're going to have to reload. So then you reload again and reload again. And again, it may be getting pushed further and further out. So I wouldn't wait. Prices, I think they're low enough. Go ahead and go ahead and get it. It's not financial advice, professional or otherwise. It's just what I would do. And I have been doing. I have been doing. So I hope you have been doing it as well. Jay, absolutely. America is still asleep at the wheel. Uh, Politicians aren't. They know exactly what they're doing, but our friends, our families, we gotta find a way to gently wake them up. Not flip the mattress and roll them out of bed. We gotta find a way to softly wake them up as to what's going on. Um, let's see. Self-evident. Am I the only one improving my food independence? Come on, people, look around you. Food. I mean, we've been talking about it, right? The food prices have been going up. Um, the even with inflation, I mean, what happens with inflation? And I showed you this a few months back. When you have inflation, now let's say for food as an example, you have inflation, whatever it is, your currency is depreciating, whatever it is, and then you involve price controls. Okay, so you involve price controls. Government says this chicken should not be sold for more than this amount. What happens is, if the farmers can't make money because let's say their grain increases and labor cost increases, excuse me, but they can't raise the price on chicken because government has set price controls, they're going to find it not profitable to produce chickens, and stores are going to find it that chicken's not profitable anymore, so they may stop carrying it, and this is the problem. So absolutely, if you can get into food, go ahead and get into food, because if price controls come into play, they can really it can hurt. It can really hurt. Grocery stores will stop carrying things. Farmers will stop producing those things. They'll look for something else to produce. That can make them money. So price controls, it's a very dangerous thing in times of inflation. Let's see. Yeah, Klaus Schwab. I had a clip on him somewhere. He was talking about cyber threats as well. So anyway, let's move on to commentary, and we'll close up here. The Fed can't do everything, although since its inception, it basically has done everything. It's just that it's everything wrong. You have every opportunity in the world right now to make things as right as you can. Make things as right as you can. And it's a beautiful thing. It's a beautiful thing that you can still make things right for yourself, your friends, your family. If you hold cash outside the banking system, that's one thing. Outside of the banking system, you have things like junk silver, as mentioned before. Silver, gold, have some Bitcoin. It does seem to be the reserve currency for cryptocurrencies in some ways. And I'm even going to say have some cash gold tokens, CGTs. Those are truly backed by gold. You just do these simple things. You can do them. It won't really take too much to do them, but you start to diversify yourself in the easiest way possible. The easiest ways possible are to do some of these things. Take the time to learn because your family is worth it. They're worth it, guys. They're worth it. You're worth it. And once you let that sink in, you gotta act on it. Okay, you gotta act on it. I tell you, when I first got into gold and silver, the hardest thing was to buy that first coin, just to buy that first coin. But once you do, then it becomes your savings in some sense. You look forward to keep adding to it and adding to it. The first one is always the hardest, but you got to pull that trigger. You got to go out and just get it and then learn it and talk to more people who are in that community, and you'll start to get a whole lot more comfortable with it and realize you're doing the right thing. This whole SBTV community is full of smart thinkers. You guys out there, smart thinkers, gracious people, genuine people. I mean, we'll always be, we're always going to be trying to do the best we can. Stick with us. Stick with us. Invite your friends, invite your family, your colleagues to not only see what we have to say, but to see what all of you are saying as well. Because I've said this before, your comments are more important than anything I can say. That's the absolute truth there. And for that, I thank each and every one of you. You've been a blessing to us. I thank you all. And I pray likewise. I pray likewise that we have been a blessing for you. And with that, Vincent, who's out there, Vincent, wake up, Vincent. Vincent, who's out there, Jessica, Jessica, who recently got married. Congratulations, Jessica. And Silver Bullion, and myself over in Singapore would like to wish each of you a very, very Merry Christmas. And of course, along with that, a Happy New Year as well. So that'll end the comments section. Let me clean that up. So, again, I hope you folks realize there are options, definite options out there. Let me go through comments again. Let's see what's out there. Yeah, absolutely. This is important. But I'm going to say this: we need more kids, right? I mean, they talked about depopulation, so we'll if you don't hold up to that, we don't mind. Populate the world, populate the world. Okay, let's see. Patrick Bateman, yes. Merry Christmas, guys, gals. Patrick Vincent, appreciate it. Patrick Bateman, Merry Christmas to you and your family as well, and to everyone out there who's watching. Tom A, appreciate that. Um, it's I think that's important. Sometimes what we say might not always be the most popular thing, but we're going to give you. you know we're always going to be genuine with you guys. I think you see that with the people we interview. We interview competitors. We interview guys who are saying, silver and gold are going to crash. You should be in this or in that, and we bring it to you because it's more important. You know, more important than for us to sell a silver coin or whatever it is. It's important that you guys have, that you folks have options out there. That's important, and we're confident you're going to find within those options it is silver and gold. These are options as well, and hopefully if we've been worthy enough and trusting enough to you, then and if we fit your needs or overseas or buy from us, then hopefully that'll come into play as well. But we do appreciate all your comments and you being here and supporting us. And Vincent, yes, thanks for joining everyone. He says, please take care. Wishing all a Merry Christmas and a Happy New Year. See you in 2022. Absolutely. And again, Faber's going to come up and Rick Rule is going to come up. So be sure that you guys subscribe and hit that bell so we can notify you when you're coming up. And just want to make sure I run through these real quick. Yeah, absolutely. We appreciate these very, very much. Thumbs ups. They mean a lot for us. It helps the algos to kind of wake up to us. They've been overlooking us lately, so we need these algos to wake up a bit and see that, hopefully people like what we're doing out there. 495, yes, Merry Christmas to you also and your family. You guys have a great year out there. Um, all right. Let's see. Jay Northrop, get Kirby on. We'll try. We'll try to get Kirby on. But again, having said that, 2022 is coming. There'll be positive things, guys. Just put yourself in the right places, and act on things. If you haven't got your first silver or gold coin, go ahead and get it. That's the hardest one to do. Once you get it, just pay attention to things. Join communities, like-minded people, but also see what's happening on the other side, because you have to see two sides of the coin. You always have to take a look at two sides of the coin. So with that, Merry Christmas, Happy New Year. Be a blessing, not a burden. That's important as well. Saddle up for what's coming ahead in 2022, and silver up as well. I'll see you guys. I think I'll see you guys next year. So let's have a good one, right? Let's have a good one. Take care. God bless.